Okay, hello. So unlike all my other previous videos and every other type of content that I have on this YouTube, this one's going to be different. This is really just answering some of the people's questions from my Discord, given that I work for a bank, right? So I've been working for a bank for 5 years, and I've been trading officially. I just surpassed 9 years in the trading space since last December. So 9 years in trading, 5 years professionally and federally trading, right? So what that means is that I'm a bank investor. I'm a investment officer level two um, for a bank, right? So in my company, we're about either the fifth or sixth biggest bank, the biggest U.S. federal bank, um, according to 2023 or 2024. I don't know exactly how much bigger or if we've even changed anywhere on that the top 10 banks list or whatnot. But anyways, why I'm telling you guys this is because based on the caption of this video, you're here to see what type of information I have here to show you guys, right? So I have also two examples on my trading view, and what two examples, as you guys can tell. And yes, if you can kind of tell, this one was just this Monday. And the other example, and I remember this other example, which was last year, Friday, October 17th. And these two examples will literally break down what I mean. And, it's going to get pretty clear, but you have to take notes. You have to kind of just sit back, watch this video a few times. You're not going to understand it. Do save this video to your catalog. Better yet, if you really want to know more of these type of things, you should join the Discord. We have a lot of people. One of the I do love answering questions from my from my friends who join my space. This is my name for those who don't know. But what matters the most, and according to this video, it's this, right? So he asked, what was the question? He said, so what happens on the days that our stops aren't hit? Well, I'm going to talk about this all in all, right? So what banks do, he asked people to know what banks do move in. Banks, big firms, all these large institutions that have cash, they do move the market. They do move the market, whoever says what. And then when you see market opening, you have these massive, massive rips. I mean, like, I believe, what was it? It was this one, this candle here, from basically wicking at 24,874, we came down all the way to, what is that? That's almost a 100-point move, isn't it? Yeah, that's a 100-point move, right? So just from there to this wick, 122 points. What people don't understand is that everything is calculated from our aspect, from our perspective, from a bank investment, equity investment officer's perspective. What he or she does at work is that we have to enter math calculations into this little algorithm that we have on our computers, right? So trading, not so much trading, but investments in general are very math based careers. Trading is actually the dumbest way to make money compared to investment. So yes, I'm being brutally honest when I say trading is it's a million times fucking easier than investment. So if you think the day trading is hard, you have absolutely not a single second that to last on an investment floor of any institution, bank, or firm. All right, so I've been trading 5 years, 4 different companies. Has been really cutthroat. I mean, that's a lot of moving here and there for me. But at the end of the day, I finally caught my groove. I'm finally stepping up. And you could just check out my YouTube. Yes, I'm finally making amazing capital gains. In other words, profit. Right. The legal term for profit is capital gains. So, look, let's get straight to it. Banks make money by, really there's few different ways, but the two biggest ways, one is by obviously placing their order in a set area, right? No, but day trading is really easy because, and I use the same exact chart even for my work account, guys. I don't use my work charts to do my charting. I mean, I use certain pivot points from these charts to replicate it onto those charts just to see entry and exit purposes. However, these charts are fluid, meaning they're continuous, so they keep going on. It doesn't stop, it keeps going on, and it shows everything by the damn second. Trading view charts, specifically forex charts, are one of the best charts in the whole damn fucking universe, right? So look, we're going to talk about strategies too. We're going to talk about why certain strategies actually don't work and why some strategies do work. But the biggest three strategies you should have. One is standard deviation. Another one, let me send this text real quick. So standard deviation will always be first because that's exactly what does move the markets. Second would be supply and demand, which is honestly, supply and demand is a great introduction to support and resistance. But in case if you're not able to understand supply and demand, support and resistance. I mean, support and resistance is one of the easiest and dumbest ways to make just a shit ton of money. And it's very calculated. Everything you do over here is very calculated. Again, it works, right? It works like a charm. So what that means, so that's one way how banks do make the profits. Another way, if I didn't clarify that, they make their money by setting orders in a pool, right? In a pool. They set their orders at a pool, which is literally why people should trust supply and demand. Standard deviation is just a math algorithm on trying to understand calculations. And now if it's coming here, Fibonacci retracement, if it comes to a certain percentage, I'm not even going to pull those tools off. But if you're going to, I don't even know what they are. But if you're going to pull that tool out, it's going to basically say that if we're down 24, 23%, that's a good enough, or 16%. Then that means that, if you put your buy stop at a certain percentage, and if it fills you, that means that you're anticipating a very bullish move, at least given that second, right? Supply and demand, support resistance, it means that every time we come to a certain key level, a pivot area, we're expecting a reaction. Now sometimes it does break it. Supply and demand means sometimes that there's liquidity that has to get fulfilled. Support and resistance, the way I deem it, the way I utilize it, is that we have to understand where's liquidity. So you see these massive candles. Well, great way to understand that liquidity is going to get fulfilled by acknowledging that there's a gap here. Now that's not really the point of this video too much. I just wanted to exemplify that real quick, just to show you that my strategy is legit. Support and resistance works like a charm when you do use other confluences such as liquidity. Now a lot of people would say liquidity doesn't matter, or maybe liquidity does matter. It's honestly right in the middle, because it really just depends on the situation. Okay, so that's one way the banks make money, by making sure that their orders are sitting at a certain pool. It's a certain pivotal area. The second, really what everybody wants to know from the Discord based on this one question, is that what was that one question? So what happens on the days that our stops aren't hit? Right now, this is what matters really just the most, and it's about the fact of what's the second way that banks make their money. It's by stopping you out. It's by having these massive liquidities. When you just take a look at this one, I'm honestly just now looking at it and just analyzing it, you would assume that if you're looking to the left, this right here would be a great support. You see how sometimes it does takes a while for it. I mean, that's actually not even a bad example. I mean, that's not the best example. Sometimes it doesn't bounce off right away. It does take a little minute, and sometimes she might linger below this area, or sometimes she might not even tap it that high before she immediately makes an immediate U-turn, right? So you have to look at the charts. You have to understand liquidity, man. You really, really do. But another way, if you don't understand liquidity, and if your strategy is not revolved under that term, I'm getting tired of saying liquidity back and forth, but if your strategy is not based on that term, based on that one single term, you will get fucked, right? And here's another thing too. If you don't have a legit strategy, now again, well, let's talk about this this setup over here on October 17th. I'm going to talk about this, and then I want to just kind of make sure that you guys understand what happens, because this was clearly a great example. So we came up, how many times was that? It was 3 taps, right? 3 taps. So we came up 1, 2, 3, then we pushed up. Now you see all these wicks to the upside. You would assume that we're gonna it does show bearish sentiment, and it shows that we have to come back down. But here's the thing, let me just clear this out. You see, where would you take a buy? Where would you take a sell? Right now, what's your bias? Because this is the 615 to 629 candle, and a minute later, meaning the next candle, After this, once I press click, it's a 6:30 a.m. New York market opening session candle. So if you don't always follow your strategy, you will get smoked in the long term. You will not be 100% profitable. You may be profitable for the most part, but you will get nasty losses occasionally. And learn this one trip. Just learn this, please, right? So I'm kind of struggling how to even phrase it because I don't even know how to say it, because banks will issue liquidity. And yes, that's my job to issue liquidity. But banks will issue liquidity literally at the most random times. And sometimes that can even happen just a minute pre-market, right? A minute, meaning 6:29 a.m. because 6:30 for me is New York opening time, PST time zone. Sometimes it could happen at 6:30 a.m. Sometimes it could happen at 6:31 a.m. So you really have to follow a strategy that actually has a decent time frame. I think anything below than I prefer a 15-minute. The 5-minute for me is small, but definitely if you're looking at time frames that's less than the 5-minute time frame, you're kind of begging to get fucked up, right? No lube, you're gonna get fucked up. And banks like to capitalize and make capital gains by fucking everybody who's kind of too stubborn and too stupid to understand it, right? So I hate saying it like that, but that's just how we refer to, people who get stopped out, is that if you're not following a setup, you will be used as a bait, right? For other people, for banks, for these big institutions to be fed off of, right? Or to enjoy the feeding off of. So what that means, and again, let's just analyze this, and I'll break it down and I'll show you exactly what it means. Again, we had 3 taps, right? So we came up, tap 1, tap 2, tap 3. Okay, we have something right here. Came down, came up, dropped, came back down, up, had the nasty wick, dropped. Okay, so we have something here. Look over here. We have something here. Look over here. We came down, bounced. Okay, we have something over here. Look. Came up, came down, came up, came down, wicked it, bounced. Came down, bounced, came down again. It seems like we had a double test, bounce, right? So what that means is that it means we have something in this area. Now we look to the right. You have to look at what's this thing doing. As soon as we bounced off over here, it kind of seems like we were kind of hoping to either have a good heavy sell-off, or better yet, look on the past, look at what has happened. You could literally look at what had happened, and all you know is that every time she came up, drop. Every time she broke this, she tested it and went back up, right? So what that means, guys, is that you have to look at previous behaviors, because we're only reacting to what has happened in the past. We're not here to react, to predict. We're here to understand and to analyze and to repeat what has been occurring previously, right? So that's a little bit new because nobody has ever told me that before, but I'm here to tell you that now. So again, let's just clear all these drawings, right? So what I think, and this was a great day. Now when you're kind of, when you have experience like me, 9 years trading, 5 years federally, professionally, legally trading, again, I'm certified. What that means is that I know exactly when to chase a trade and kind of follow and understand when to pursue the intended move, because of what was used as liquidity. Now, a lot of people, this is very rare, but it does happen right at market opening. Sometimes it can happen a minute pre-market. Sometimes it can happen 2-3 minutes after pre-market opening. That's actually very common, but it's very rare that we won't have a simple retest right at New York opening for the intended move. So here, I knew, based on these wicks, I knew that we could have a retest here and we could flush. And then I wanted to see it just come back down here just to curl its way, just to pump, right? Because this is exactly what we're doing. We're tap, came back up. We're going to tap this. We're going to just push it. And we want to rock it. It was going to be a rocket type of day, right? But here's the thing. I don't want to do that. Here's the thing. And I'll show you exactly. And the setup and what had happened is going to make so much sense. And you're going to be like, wow, literally markets are calculated. If we just press this, right? So let me put my little support zone. My support zone was right there. Yeah, seems legit. Seems pretty fucking legit. I took a sell, and I literally was gonna take a buy had we came down here. But I was expecting immediately, right? But here's the thing, and this is also why I adjusted my stop loss to protect my positioning right away. Now, she didn't drop all the way. She actually flushed halfway, and then she immediately shot back up. If you didn't adjust your stop loss or try to secure some type of profits, you would have got fucked up. Because here, let me break it to a 1 minute time frame just to show you guys. Let's just show you guys, right? Remember I said I wanted to see a retest off of here, then we could flush back up. But instead, this candle right here, the red one is the market opening candle. She dropped a little bit and then immediately flushed up, and without touching this, we immediately kept coming back up, right? So I mean, geez, guys, let me just tell you guys, if you were in a buy or if you were in a sell over here trying to capture this little move, you would have got a little bit fucked up. You probably would have got 30 points, but then it immediately ran up. I think it was close to 100 on my work account, because that was crazy. I had not ever seen it, but I did receive signals. Indications on my heat map to show that it's gonna be a pretty difficult day. So there's a lot of fuckery. There's a lot of things like this, right? So that was basically the bank liquidating all the people that was anticipating a nasty sell-off at market opening. You got fucked up. I remember it because that was also a red day from my cohort, basically the group that I was working with, NYSE for NAS 100 at that day. But here's the thing. Let me just delete this. She came down. I remember when it retraced a little bit, I got in on the buy. It was, I don't exactly remember where, but let's just say it was here. It was close to this, where this body is. And next thing you know, I think it had a retrace, and then just look, it immediately pushed up, right? And then when you're wondering, and you also have to kind of consider, banks do this type of stuff to also make sure that they can benefit the most off of it. You have to think from a bank perspective. What is happening here? What is the bank trying to tell you? What are these big institutions? What have they been doing pre-market? Because they're only going to do it again. It's not like, guys, you guys don't understand. There's so many different type of, like I'm an equity investment officer level 2. There's 3 levels. I mean, some places even have 4. I don't really know about that, to be honest, but every place has 3. Each department and level of investment equity officers control different time frames. So there's one department that controls pre-market, then there's one department that controls basically New York opening, and then the third department controls basically, I think it's from 8 or 8:15 a.m., right? So till 10 or 11 a.m. So you guys have to understand that everything is calculated. Yes, sometimes there are mistakes, but it just means a choppy day at its worst, right? So if you don't have a strategy that works every single day, and if you don't have a strategy that's based off of repeated occurrences, repeated behavior, repeated patterns, you don't have a profitable strategy, because you will not last a single day at my job. You will not last a day as an investor. And yes, investments now are very modernized as kind of like options trading, if we're being brutally honest, which have been getting much better. However, still with puts and calls, it does get a little bit confusing at times. I'm lucky that we don't have to worry too much about puts and calls yet, but that's exactly where traditional investments, or at least bank investments, have kind of been yielding. Again, there's so many different types of investments that banks really utilize now. But you see, this is why it's important to understand liquidity. This is why it's important to understand the bank's timesheets. Now, you want to do what's been happening before, because if you're going to take a stab at it against the, on the smaller time frame, let's say you're on the 1 minute time frame, yeah, sure, I feel like anybody could have got this buy, but let's say you're over here pre-market 1 minute time frame. I mean, so many of you guys want to hop on to the 5 seconds, 10 seconds, 15 seconds, 30 seconds, 45 seconds, the 1 minute time frame. You guys are absolutely going to get cooked. There's just no future in trading for you ever. And I got even bad news to even announce, but if you're using basically anything smaller than a 3-minute time frame at my company and my work, I mean, I feel like this is even with my previous employers as well, you will get fired, you will get dismissed, and you will literally get cursed at by the management because you are biologically and legally, probably even financially, just retarded, right? And it's a pretty embarrassing walk of shame back to your cubicle to pack up your belongings, just to pack it up, just to get the fuck out of that damn office, right? So don't really, if you follow your rules and if everything is truly educated, even if you had a bad day, even if you fucked up, but look, everybody has those days. There's really no one to blame but yourself. But if you kind of put yourself in a form, in a manner that everything's calculated, everything is truly thought of, right, from your side. If you thought about everything before taking the trade or that position, to keep it general, then whatever happens, you should be able to kind of accept it, right? You should not be in denial. If you blow an account like what I do with my small accounts, it's a very humbling feeling. But if you blow those accounts, you gotta I mean, you have no option because you tried your best. It just didn't pan out, but you tried your best. That's okay. That happens. That still happens to me. But the thing is, because I know how to trade, because I know how to master supportive resistance, and because I know banks timesheets, I mean, really, you can. I'm trying to say in this video, if you look at a certain pattern, you should be able to understand when to take a certain setup versus when not to, right? Because banks don't have a consistent time schedule. They don't. I mean, I know that friend, a lot of people watching this video, you wanted a specific question, like, like 10 minutes in, March is gonna fuck me up. I can't, bro. That's just not how it works. My job, and that's another reason why I preach that you, as a day trader, as an investor, time is your biggest enemy. Time is your biggest enemy. I mean, I don't really know how else to explain it. Time is not your friend. 1 second you're in profit, say 15, 20 points in profit. Next thing you know, just because of a click of few buttons from my cohort, my office, my group, or it could be from SNS Corp, or it can be from the Vanguard's Corporation, or it could be from BlackRock. And next thing you know, one single fucking button can literally blow your account up. And that's exactly why you have to take everything that's calculated, and you can't look at the damn time, right? So actually, I didn't realize that my time over here is kind of out of this little square that I'm recording. But you can't look at the time. You have to look at the setup. You set up over the time, right? Because time in investments, in day trading, does not give a single flying fuck. So this is one example, right? Now, again, just to reiterate, this thing dropped partially and it shot all the way up because it knows that typically people, and I was kind of thinking about this too, typically a great stop loss for me would have been right here, and it wicked it. It wicked actually a shit ton of people, and I remember this. It was a brutal day for a shit ton of people in few trading discords that I was in. People got fucked up because they wanted to see a nasty sell-off because it's Friday. You have to think about Fridays for stocks are sell-off days. Mondays are bullish days and Fridays are sell-off days. They're bearish days. You have to think about it, guys. It's literally social media, everything is propaganda. Banks will take that to use it against you, right? So that's actually going to be something I'm going to talk about in a few minutes, but I want to first explain the other example, but I want to finish this one, show both of the examples and tell you guys and show you guys something else. Soon as it closed, all the fucking traders, nice, sure, could you have taken the sell up here? I didn't actually see a damn setup for shit, but damn, it was a good one. It was a fucking good one. Actually, November would have been a great setup too. I'll show you guys two more examples. But once we came down, and look, you can't just take a sell anticipating it's gonna come all the way down. Because if it stopped everybody out pre-market and at New York opening with that massive wick, I mean, what's the percentage that it won't do it again? So the correct move, instead of really doing anything at market opening, you wanted to see a reaction off of here. If you did not get a reaction off of here, then you should have not had a fucking trade. Now look at what had happened at 15 minutes after New York opening. I mean, it was a fucking massive bullish day, right? Look at that, easy. easy 100 points. Now, if you held it, if you had some guts, I mean, I don't know. I personally would immediately take out, but if you held it, oh my god, 200 points. That's exactly what a bank and large institutions do on the day in, day out. So, um, so again, you have to put time to the side. I do want to show you guys another example because, and both of these next examples are going to be bank holidays. So let me look at when in November it was Thanksgiving. I had a great day because I know how typically bank holidays is when banks don't work, but big institutions, large institutions, insider traders among politicians, they still trade because, and of course my strategy, guess what, my strategy still fucking works. Support and resistance is king. Support and resistance determines cash. It literally is a fucking a map to finding the gold or whatever. I mean, that little episode of SpongeBob was, right? So what was it? It was Thursday, November 27th. Oh, it was after. So I have to 27th. I know I had a great fucking day. So people don't have legit strategy. That's why they get fucked up, right? This is why people get fucked up. Okay. Now we're looking at this. This one was actually a little bit more on the tougher side, and given that it's Thanksgiving and banks are off, when it says that there's a bank holiday, it doesn't mean the market's not it's not going to function. It just means that banks are typically what determines determines momentum and volume. The momentum part, banks literally add to momentum, but that doesn't mean that, you know, if you have a few $billions in orders, you're gonna have volume, and when you don't have that, you're not gonna have a shit ton of volume. So, but it doesn't mean that banks 100% move and determine the market, because it takes a group of people. It takes literally $1 trillion of cash, and or even few $100 billions worth of cash positions to actually move, right, at any given second. So look, we came up, came down, came up, came down, tried to come up, curled back its way back up. We had a nasty wick indicating that there's something over here. It came back up, and we're curling. Want to see it hold something over here based on what was happening before. We did peek out over here. We were holding something over here. It's a little bit hard one for me to determine, to be brutally honest. I remember I did get in slight liquidity. Slight drawdown. But nonetheless, it was a great fucking day, right? So ideally, I thought support could be right there, but my stop loss was right. Well, my stop loss was right here. I wanted to be a little patient, and since we didn't have banks, I knew that I would have time. I would have the space to close out the trade. Now look what had happened pre-market, right? So this is a 6 to 6:15 candle. I want to start trying to take a trade from 6:15 to 6:30 or after 6:30, right? It wicked it. I got in, and let's just hop on the 1 minute time frame. As you can see, it did slightly get in, and a little against me. I think I entered actually right here because that was a very, very, I don't remember how much I was in drawdown. It was very little though, and plus I had de-risked. Look at what happened. So it does act a little bit funky. Of course, we weren't, had banks been working, it probably would have been a 40, 60, maybe 30 point move. Who knows? But it takes a while. You have to be patient, but it still works. See, right? It still fucking works. You don't need banks to do none of this, because banks are not the only players that move the market. People just don't understand this, dude. People don't understand it. But here's the thing. And this again, support and resistance. I'm showing why and how you can also trade on markets. And days where banks holidays are on. I'm getting my words mixed up. You don't need bank to really give you the setup, right? In fact, it's actually trading on a bank holiday would actually give you more confidence, because it's a little bit, you have to be more patient, and you don't, if you're in the wrong, if your bias is fucked up, if your bias is incorrect, you have a lot of time to get out, and you can be patient, right? Because the markets move so slow, right? So that was just proof to show that my strategy works because it's based off of pattern structure. Now, this Martin Luther King Jr. Day, a lot of people didn't trade on this day, and it's just, to be honest, this was a clear setup. And this is exactly what if you don't understand setups, and if you're just taking a trade on New York opening, you're gonna get fucked up, because that is not always the exact move. That is not when you should always be making moves, right? So look, came down, bounced, came down, tried to come up. The body did close, but then we had a little retest. Came up, came down, had a massive wick, and then we flushed. Now we curled its way back up, and ideally, what do we want to see at pre-market, right? What do we want to see? Okay, what do we want to see pre-market? So let me get rid of this drawing, since I already drew it, since I showed you guys. What do we want to see pre-market, right? So the 6:15 to 6:30 or 6:30, right? So again, 6:30 is market opening. I want to see it. Now we can zoom in, right? Because I already know the pattern. I was able to read it. I want to see it basically retest this, and then I want to see a massive sell-off day. So with this basically being my ultimate goal, and if it comes below it, I would leave it as a runner. But that doesn't always mean that that's going to happen, especially given that we don't have a bank holiday. You can't always expect that, right? But what we can expect is what had happened before is going to repeat itself again, because what had happened before, it's going to do it again. So what that means is that came up, flushed, came up, flushed, came up, flush, right? But if you entered, let's see what happened next. Did it retest it? No, it came back down. A lot of people would have put their sells or their market entered over here. Look what happened. I think you probably would have got a great sell, and that was, you would have banked off it. But and luckily, that did pan out for you. But most of the time, if you got in a sell, it could have been pretty bad, because I think the next candle was when people were over here. I still remember that was a day that some people who did trade, they were the ones who was expecting basically a retest of this area over here before a massive flush, and next thing you know, she came back up and she basically stopped these people out, or they were holding it for basically hopes of it just turning around, since bank holidays, this and that. But nonetheless, they don't understand market structure, right? She was gonna come back over here for a drop. So as soon as she wicked it, I got in, not by the wick, I got in right there. I did make a trade recap of a video of this just 2 days ago. Made $5,600 on this one setup. And while I wanted to see it completely come down, it didn't do that, man. And it just kind of wicked this, right? It wicked this, and the next thing you know, it just kept just going up. And, it retested what was once resistance, now support, and it just kept going up. I think it also, it came back down to test it, and it just kept going up. So you have to understand that there's no time. You cannot take your trades and base it off of time. I know so many people who come to the markets 2-3 minutes pre-market, and they're like, whatever happens 6:30, I am taking the buy, I'm taking a sell. You can't do that. That's how you're never gonna be profitable. So hey, that's gonna be it for this video. I know it's a long video. I've thought so many ways of how to explain it, and honestly, I don't know how else to explain it. It's that oh, this guy's responding. Oh yeah, talking about other traders and influencers. Very common with the future side. I just can't really understand for the life of me why future traders always want to basically accuse forex traders of being frauds, when they're basically, and I don't want to say names, and when you join the Discord you can see all the names yourself, but I don't want to say names. I'm not into that fighting stuff, man. Should probably get rid of that. I'm not into fighting, but basically every single trading guru that's on the future side, that's affiliated with, they are affiliated with prop firms, right? They have their affiliate links, and it's crazy because when they have massive blocks, when they have the insane red days, they're immediately posting, give it like 10-15 minutes of a space from once they post their loss, and they'll immediately post their affiliation links, join this. And a lot of people, if I got fucked up, they probably fucked up, and they post the links, and they make fucking 6 figures, maybe 7 figures, man, a month in affiliation links. All right, so this is real trading, because I work for the fucking bank. This is real trading. Again, um, to be brutally honest, ICT, am I saying it's a bullshit strategy? Look, from a banker's perspective, we really just have four strategies that are commonly used. And aside from the three that I mentioned, there's another strategy. I don't 100% know what's the other one, but it's very, very math and calculus related. So, and based on. It's very math based on. But day traders wouldn't really understand where to get those numbers and how to do calculations from. That's more towards options and traditional investments. So, um, we don't use fair value gap. So I just don't get it, right? People ask me, what about that breakup structure, the BOS, and then people ask about accumulation, distribution, masturbation. I don't understand these terms for shit because we just don't talk about it. We don't talk about it. If we don't talk about it in the offices as we're moving the markets, why would you? Why would you base your strategy off of it? We don't talk about it. I literally don't like. I as somebody who's been working for the bank for 5 years, I don't understand that. I've never heard of it. They, like there's a FVG, a fair value gap, and then there's something else, an inverse fair value gap. It's like talking about a vagina and an unvagina. Like what? It just doesn't make sense. So is it a bullshit strategy? I mean, I'm trying my best to say yes. Can it work? I feel like anything can realistically work. It's just about statistics at that point because risk management, yes, risk management is king. For those who don't know, this is why I love to do small account challenges, small account flips. And just to be brutally honest with my hand in my heart right now, um, I blow, I typically blow my small accounts because when you compare them to, let me watch any of my trade recaps, look at any of my profits to compare basically a few $1,000s of profits in seconds or maybe a few minutes compared to just making 40, 50, $60 on a 200, 300, 400, $500 account. It's bullshit. It just, that greed obviously gets a hold of me. And yes, I, even after trading for so long, I still get emotional. I still feel sick. I mean, it was just yesterday. I had an insane day. I had to hit a home run. That's basically the most I've ever made in my 9 years worth of trading. Um, it's very rare to even see that number. Still trading for any of my companies as a whole. But now, I mean, today was basically I made that same amount today at work as what I made yesterday on my personal account. So and it's just crazy because these numbers come so easily now. It's just it takes so much experience to actually look at something into without even moving my cursor, without even doing much dissecting of the charts or much analyzing. I can literally look at it and be like, I see support right here, man. That motherfucker, I see it, right? So that's how trading feels to me. It's sometimes if I have to spend multiple seconds or just a few minutes actually analyzing the charts, I already know myself to the point where I'm gonna take a loss because I don't understand a fucking piece of thing that's occurring. I don't understand what's happening. So, look, it's okay, but if you hop on small time frames, you're never gonna see daylight, and you're gonna get liquidated. You're never gonna understand what's exactly the bank is doing at each given second. All these big firms, they don't. You just can't figure out what's occurring, and you will be used as bait. So, really, my biggest tips here: use a legit strategy for one, learn market structure, and then base it off of your strategy. Now if you understand market structure and you base ICT, it does not work. It does not. I mean, show me how it works. Show me 2 3 setups, because there's legit always 2 setups. I mean, even one setup, there's always 2 setups. I mean, one setup is for sure guaranteed, because I mean, I can only miss 3 setups a month, a whole month. That's everybody in my department. So if you're telling me you're only taking 2 or 3 trades max a week, you don't have the best strategy. You don't have a legit strategy. You don't have a strategy that cooperates along the lines of how banks and these big firms input into their algorithm to move the market. So you have to think on the same pace. You have to think at the same rate, you have to think on the same page as them in order to make cash, just like how they are, right? Because that's their job. For you, you have to treat it like a job. You don't treat it like a hobby. I mean, you're hopping on 2, 3, 4, 5 trades. Yes, even I, till this day, and still some of my coworkers, we take multiple trades. Yes, is it a gamble? Oh, 100%. I mean, the moment that emotion gets involved, it's no longer a hobby. It's no longer, I mean, you can't no longer say that you're doing it professionally, right? That's actually the best way to put it. um, Trading and investing can be a gamble at any given second, just based off of emotions. Now, the same guy who actually asked me to make this video asked, what's happening on the days our stops aren't being hunted when we get straight TP trades? Well, I feel like there's only really one answer to that type of question, and that just means straight up, you had an amazing trade. You don't ever want to feel comfortable. You always want to keep your guard up, because at any given second, liquidity, especially given that this current federal president and his administration, really, they're doing so much insider trading. It's kind of absurd. You want to make sure you're protecting your accounts no matter what. The whole um, either we're hitting TP or we're getting our stops ran through, but I'm not moving my stop loss. I'm not protecting myself. I mean, best of luck to you. I just don't think that's literally, especially in this administration, I do not think that's the safest and that's the best way to continue. Especially it's 2026. Now, with that being said, let's hop back. We talked enough about this questions and this topic right now. Let's hop back on to these future traders. If their strategy, and they feed you the most bullshit strategy and make you join their discords, which you have to pay a few $100s a month. Then you have to pay $150 or $200 a month for signals, and then on top of that you have to buy their mentorship because you don't understand anything, which is exactly how it's supposed to be. Nothing makes sense because nothing is accurate to begin with, right? You can put all your heart, your little mind to it. You're not gonna, you could binge watch it on YouTube, but nothing makes sense about it, right? And then you have to pay top dollar just to get some type of insight, and then months later you're just gonna give up like 98-99% of the other traders, because most of them don't ever understand, because they don't really see the true reality of day trading. It's much easier, I promise you. It does get a lot easier within time, but there are still days and moments where I still sweat, right? Where I still panic, where I still have anxiety. I promise. I still go to the bathroom almost every day pre-market or before I reach my office, because that stress, that it just builds up. You know what I mean? So when you have so much caffeine and your body is like, it's just shaking, and your eyes just start, what is it called? Your eyes start twitching, right? Because of stress. So your blood pressure is high, you're agitated, you're irritated. It happens to everybody. I promise. That part never gets easier. I just, if you're really bothered about that right now, I just don't really think I can offer kind words. But really, my only advice is that this field, it's not for you. If you can't overcome it, it's not for you. And I mean that as a great advice, just to kind of save yourself from getting in harm's way. But another thing too, you guys have to keep an eye on and do your due diligence on who you're taking advice from. You can't just always, again, I don't want to say names, but from the future side, there's like 5 or 6 names who every single time, I mean, people get paid, even these kids, dude, who are 18, 19, 20, 22 years old, even younger than me, dude. I'm 25. They're not profitable. Even if they get payouts, it's like 250, 500, and they're draining their futures account back to 50K, which was basically base, right? Or maybe they're even taking more money, so now when they resume with trading the next day, they're already in a slight drawdown. There's no sense in that, but that doesn't matter, because they're making all their money from affiliation links. It's because of guys like you, right, who just want to join people in discords that are strategy hopping. So hey, that's all I want to say. Again, if this video blows up on YouTube, I'll be damned. Probably will have to take this offline. Now, if you really stayed and watched all 45 minutes of this video, I mean, hey, Merry Christmas, Happy New Year's, 2026. Every trading guru, fake gurus, making their videos online because it's a brand new year. So many people want to get into trading. They want to change their life, and they're starting off at the wrong area. They're starting off in the worst spot. worst case, worst spot scenario type of situation, whereas you're over here who actually wants to learn from me. So hey, as always, look, here's my Discord. My Discord is this, day trader 103. Do me a favor, add me, or ask for my link on the YouTubes, and just look. I'll put you guys in here, join, right? So we just hit 130 people. I mean, you guys see this yourself, right? 132 people. We had 4 people join in the course of me recording this video. That's crazy. 4 or 5 people as actually. What started off as a joke, but man, I offer so much content where people actually praise me non-stop, right? So, and you know, respectfully, it's deserved, because I'm not here to make a course. I'm not here to scam anybody. I have not made a single dollar from this Discord, or have sold anything that ever had a price tag. Never, never, never. So comment, join this Discord, learn, and you know, make your money and live whatever life you want. It doesn't matter how you spend your money. I'm not here to even tell anybody how I spend my money, because that's no one's business. But come over here, you know, I like going on vacations, but where is it? I like to go on vacations, enjoy my life, my apartment in a very expensive place. You know, we're here to. Where are all these pictures, dude? Right, we're here to just talk about each other, get to learn each other. I mean, look, this is a very active Discord, right? Very active. We got cars, and actually, it's a snowy day for this type of person. I didn't know they live in a snowy place. So I like going to drinks. This Anaheim. I live basically 7 miles south of Anaheim. I love going to this rooftop bar just to watch this on Friday, Saturday nights, or maybe as a first date. That's what I like to do. I like to meet new people. People love cars. People love boats, right? So views, you know, you join at your own risk. But before I end this video, let's look at this. You said that banks make their money hunting stops. They do, 100%. And I believe I explained that in this video. If I didn't, or if you need more clarity, just shoot me a DM on Discord, please, via DMs or in the server. So I asked what's happening on the days our stops aren't being hunted, when we get straight TP trades. I mean, that part itself is pretty self-explanatory, that liquidity will come in later, because every day banks will make money, not just from one way but multiple ways, right? So it's always, you guys got to remember this. This is actually what I should have said in the very beginning. It doesn't matter on the time, but banks will have 2 agendas. One, remember I said there's a pool full of orders before the, like over here, that came down, took it out. Maybe people got in buys over there, they're still holding. Nope. Fuck them up, right? And this is actually a great example. This is a great example to answer his question. What if it goes straight to TP? That's great. Call it a TP and get out. Now, if you're going to be greedy and try to take another buy, that's exactly where you'll get liquidated, because it dropped, right? So sometimes banks are that kind. More than often not, that this is what actually happens, where basically you can have a great trading session for the first 10 to 15 minutes, and the next thing you know, you'll have a massive drop, right? So I mean if we even look at today's trading, it was actually this one. I remember this was the bank liquidity candle. So it could happen at any given second. It could happen at any time. And there has been times where it has happened 2-3 minutes in New York opening, and you will see a 90-point candle move. But when you see these big candles, just know, and sometimes, you know, we might have been sitting cash orders here. I was out of my office. I wasn't looking at my scanners, but we probably had a liquidity check over there. I mean, we just wanted to close all the buyers. There was a lot of people anticipating that as soon as we cross this, as soon as we cross that, as soon as we cross this, and let's just drag it, we would be floating, right, to basically new highs, right? People don't understand that. That's not how it works. You can't always have things your way. So if you look at how I traded yesterday, that was while I was continuously reading the heat maps and the order flow sheet while doing my charting. Yesterday, and days like how I traded like yesterday, I promise you, that's if you can understand that video on each setup, you can make fucking 7 figures a month. Forget 6 figures, I promise you. But anyways, none of this should be taken as financial advice, as always. So, as always, peace, love, and cheers. Thank you.